What is going on, y'all? This is Pay Me in Dividends, and today is June 25th, 2025. I am back with another video. Welcome to the channel. If you are new here, we talk about dividends. I talk about dividends here. I talk about ways to generate passive income through the stock market, more specifically using these different ETFs that write options on different assets, and basically generate income so that you can create your own paycheck. All right. So the ETF I want to talk about today is BCCC, and this is from Global X. Now, I just discovered this ETF about an hour ago, and I felt compelled to make a video about it because if you're familiar with Global X, you will recognize QYLD, which is pretty much the OG of covered called ETFs. All right, this one came out back in 2013. It writes covered calls on the NASDAQ index. They also have a whole suite, an entire suite of ETFs, but QYLD is definitely one of the more popular ones. And this one pays about a 12% yield. And again, it's been out since 2013. Over a decade. This is like the pioneer of covered called ETFs. Not something personally that I'm invested into, but it is alive. It's still alive. It's still kicking out money. And so Global X has been around for quite a while now, right? When it comes to these, dividend, ETFs. And so this same ETF manager came out with BCCC, and this is a Bitcoin covered called ETF. Now, what's interesting about this one is it is very similar to BTCI over at Neos, all right? And the reason why they're similar is because of their holdings, all right? Now, you'll see that majority of their holdings is HODL, aside from cash, of course, right? If we go to BTCI, excuse me, it's the same exact thing. They have a lot of cash in treasury bills. Again, I mentioned this in previous videos, but there's some sort of regulatory, restriction that kind of caps them out or restricts them from holding 100% of a Bitcoin ETF as an underlying. But nonetheless, majority of it is a Bitcoin ETF. In this case, it is HODL. Right, ticker symbol HODL, and it is the same thing for Global X, BCCC. All right, so the underlying is HODL, and if you're not familiar with HODL, and I want to show you guys this entire thing so you understand what the underlying is, so that you know what you're getting into. All right, so the underlying asset is HODL. Now, HODL is a spot. It's a Bitcoin spot ETF, which pretty much tracks the exact price movement of Bitcoin itself. And you can see here, the investment objective is to reflect the performance of the price of Bitcoin. The passive investment vehicle does not seek to generate returns beyond tracking the price of Bitcoin. All right, so you're pretty much indirectly investing into Bitcoin just in an ETF, all right, instead of having to, buy Bitcoin on a crypto wallet, or and so that is the underlying for BCCC. Again, extremely similar to BTCI, but this is just another option that you have. Maybe you may have some more trust in Global X because they've been around a bit longer than Neos. Although I really like Neos, I think they have a really, really good suite of ETFs. But I think this really I think all of these ETFs that are coming out is good for the market because competition is always good, and all of these ETF managers now are incentivized to outperform each other in order to keep investor interest. All right. So I like the idea of these ETFs coming out. Now, we do not know the current yield of BCCC because it just came out, right? The inception date is June 3rd. So it just came out this month. If you look at the dividend yield, you can see it is not applicable at the time. I want to show you guys a trick though, all right? There's a website called marketchameleon.com. And on this website, you're able to look at the implied volatility. So what I did is I typed in HODL up here, right? I typed in HODL. I went to HODL, and here it is. Because again, we're looking at the underlying, which is what they're writing the options on, right? Which is HODL. And so if you look at the current implied volatility, it is around 40. All right, the 52-week average is around 39. Now check this out, BTCI, if you go up here, you'll see the dividend yield is at 30%. Now, if you look at the chart on BTCI, they actually leave a bit of room to allow the share price to grow as Bitcoin goes up, all right? So it's not completely capped out. And so, this implied volatility is going to give you a ballpark range of the annualized yield. So although Global X has not announced the actual yield, you can assume that it'll be around 30 to 40%, depending on how much they cap the actual share price appreciation. If they're writing calls on the entire underlying of HODL, it'll probably be closer to 40%. If they're allowing it some room to grow, it may be around 25 to 30%. Now, just keep in mind that this implied volatility will not always reflect, precisely the annualized yield of an ETF, but it will give you an idea. And I'll give you another example here, all right? So we'll look at QQQ, all right? And we'll go over to NEOS and we'll pull up QQQI. So QQQI writes calls on the NASDAQ, right? And they're currently, and this is just an example, this has nothing to do with the Global X Bitcoin ETF, but I just want to show you how you can somewhat predict how much money you're going to make on an annual basis, all right? And so you can see QQQI has a 15% dividend yield, right? Annualized, paid out on a monthly basis, but annualized, it's a 15% yield. If we look at QQQ and the implied volatility, right, we go over here to the left, we click on implied volatility, you'll see the current implied volatility is around 16%. The 52-week average is 20%. And the yield that QQQI is paying is 15%. So it is very, very close to that implied volatility. Now, again, it's not always going to be precise. You got to remember that these covered called ETFs, these option income ETFs, the yield is always going to fluctuate unless it's a targeted yield, meaning that they're, targeting a specific percentage, on a monthly basis. But for the most part, they're going to pay out whatever, however much option premium they're able to generate from the market on that given month. And so looking at this implied volatility, you're able to somewhat estimate how much an ETF is going to make. You're able to identify whether an ETF manager is overextending themselves, and which may cause, some NAV erosion. I'm sure you guys have heard that term a lot, net asset value erosion, where basically the share price little by little kind of goes down over time because, there's so much option premium being paid out and not enough of it is staying in the fund. All right, so you can sort of get a gauge on the characteristics of an ETF and where it's heading moving forward. Now, again, do your own research, do your own due diligence, but these are just a few things that you can look at, if you're interested in finding out the characteristics of an ETF and what you're putting your money into. And so, again, Market Chameleon is a very, very good tool for that. I'll even do one more for you guys just so you get a clear idea on what I mean. We'll look at SPY, right? We'll look at the S&P 500 ETF, and we'll look at the implied volatility. And we can see that the current implied volatility is around 13%. Now, if we go to a fund like SPY, which writes covered calls on the S&P 500, we can see that the annualized yield is 12%, and the implied volatility on SPY is around 13%. All right, so not exactly the same, but close enough. But again, you just use this as a tool, as an estimation, as a gauge, as sort of a metric. But just keep in mind that it is not going to be precise. And a lot of these assets can be very volatile, especially something like Bitcoin, MicroStrategy. While we're here, we'll actually look at strategy, right? And we'll look at the implied volatility of strategy. Now, it has been going down as of recent. We can see the current IV is 43, but the 52-week average is 88. The 52-week high is 226. So you can see how much MicroStrategy fluctuates as far as implied volatility. So it's a bit more difficult to gauge the annualized yield on something like MicroStrategy. Like if you're invested into, Misty, MSTY from YieldMax, or one of those, covered call ETFs that go based off of MicroStrategy, because there's such big swings, right? The volatility is very, very wide here. So for this one, it's a bit more difficult to estimate or predict, the yield on a monthly basis. But something like, a Bitcoin spot ETF or the S&P 500 or the NASDAQ is a bit easier to gauge and have an understanding of whether or not an ETF manager is overextending themselves. So back to this Bitcoin covered call ETF. Again, there's just another option in the market. I'm not telling you that this is something that you should invest in, but it is interesting. It mixes things up. It brings more competition to the market, which now demands these different ETF managers to stay on top of their game, to keep investor interest and keep people investing into their ETFs. So you guys let me know in the comments, what Bitcoin cover call ETFs are you invested in? Which one is your favorite? You guys let me know in the comments. As always, I appreciate you stopping by the channel, and I will catch you in the next video.